Well, this is an exclusive chat we are having with the top management of UPL. They are announcing the completion of their mega-billion-dollar buyout, Arysta Life. And today I have with me Vikram, Samir and Anand, the top management of UPL, to discuss the logic and the way forward. Gentlemen, all three of you, thank you very much for your time. Vikram, let me start with you first. So when this acquisition was actually announced, people raised a lot of question marks on it. Perhaps the markets did not really understand the benefits to a larger extent, and the company's stock price was, punished a lot. But now things are sinking in, and a lot of analysts we speak to are understanding the benefits which will come. From the management standpoint, which financial year will we actually start seeing meaningful benefits to start coming in, and where does it put UPL in the global landscape?
So first of all, let's give a little bit of the background. The global agrochemical industry has been consolidating. Size does matter in our industry for launching new molecules, for having economies of scale, for being able to launch new products, the registration pipeline and things like that. So you need to be of a critical size. UPL, as you know, is put together with about 40 different acquisitions. We have been looking at various companies from time to time. Arista was a very, very exciting opportunity that came to us. And we are very, very happy that the acquisition has gone through. Arista adds a lot of good points to us. The complementarity of geographies, the product portfolio, their huge strength in biologicals and new actives. So these are the kind of things that really help us. Talking specifically about the benefits, so the acquisition just was closed on the 1st. We still need to do a little bit more of a deep dive. We expect in the next 12 to 24 months, a lot of the benefits, the synergies to start kicking in. That's it.
So talking of always looking for opportunities, I must also probe you on Garda Chemicals. That's the name which is coming on your radar. We are gathering. What's your take there?
So we are presently, we look at every company that comes our way, but our practice is never to comment on it or never to get excited, because if things happen, it happens. But we have a board, a new board, which we will talk about later, and all these decisions will go through that whole process. I think it's far away. I don't think there's anything that's going to happen any soon. There are companies in US, there are companies in China, there are other companies that we are always engaging with. So acquisition is part of our DNA, but there is nothing that's going to be announced or happen so soon. We have a lot of good things to do, and the final decision will be, with the board, and so it's still far away,
sure,
if anything.
Samir, tell us about how the Indian agrochemical space is actually looking right now. There are few companies which have become very large in the last couple of years. Margin profile is good, but they're also always under constant scrutiny as well from the regulatory side in terms of the impact on environment. How are you seeing things develop and change from here on?
See, the agriculture is improving. So one good thing is that it is improving, and while it is improving, the consumer also is started looking at a much better quality of the produce which it reaches to you. So the consumer is demanding now a better quality, and that is what is making companies like us. Vikram just told you about that Arista, when we acquired, it was a very, very big biological business. Now, what we want to do is bring this biological and chemicals together to complement the offer for the farmer, so that he should be not able to only produce, but produce a very good quality, which is of a global standards. So that's something which is being differentiated. As UPL, we have done much better than our peers. On almost a CAGR of about 15%, we have been growing, where the industry has been almost going at about 4.5%. So we have done much better than our peers in this industry.
Sure, you have outperformed the sector. Let's put the spotlight on the numbers, because numbers did make people a lot of nervousness had come in, and when this acquisition was announced, that Indian company, going ahead and buying out such a large company, does it make sense? Historically, we have not seen big acquisition in India actually turn around. They have become many companies in different sectors. So how did you really talk to us about numbers, your cost of capital? How does it all add up to make this a logical buyout?
Sure. So actually, I must say first, let's get the record straight. We have done about 40 odd acquisitions and very successfully integrated all of them. Needless to mention, this is a big one, for sure. But we are very confident, and the more we know about Arista now, as we have access to data and financial information, the more we are excited about, because there's so much complementary business, and there's just so many opportunities to work together that we feel that it's been a perfect fit as far as UPL is concerned. Talking specifically on the numbers, I mean, I may like to say whatever I want. Finally, the proof is all the 3 rating agencies have continued our investment grade rating despite us borrowing about $3 billion of debt to acquire this company. Also, we have always been doing, we de-risk ourselves, and therefore this time, because it's a big acquisition, we brought in partners like Ajaya and TPG, who are contributing about $1.2 billion by way of equity contribution. Although I must quickly add here that this has been done in a step-down subsidiary. So there's no dilution at the listed company level. So we remain confident, and the proof, as I said, the rating agencies, all 3, Fitch, Moody's and S&P, all 3 have continued their investment grade rating on us, as they feel confident that in 18 to 24 months, we should see significant cash flows to bring our debt down to reasonable levels.
You've always maintained very high double-digit margins on a sustainable basis. Once this acquisition also fits in, how does the margin profile of the company on a overall consolidated basis also improve going forward?
We would see some improvement in the margin profile, largely because Arista has a fair amount of access to various what they call the J makers, that is the Japanese boutique R&D companies. They have access to their products, and they have been selling these products, which are, some of them are still under patent, and therefore they have better margins. So between the 2 companies, we expect the margin improvement to happen, both at the gross margins level, as well as you will see the synergies kicking in because of the various cost synergies, and therefore you will also see the EBITDA margins going up.
So talk to us about the recent fear which the company was grappled with, that in European region there are fears of big drought coming in, and hence a lot of companies like yours which are servicing that region may actually get impacted.
Well, I think the overall geographical spread, if you see, of the large company like ours, I think it is so balanced geographically that there is a cross hedging which is taking place. So, and same is within the Europe. Sometimes you find that the rainfall is sufficient, and the temperature is, and the humidity, it allows a lot of fungicide growth to flourish. But on the other hand, on the other season, it could be that there is a more dry situation where you see more insects and the other segments growing up. So I think, yeah, sometimes the situation may be slightly down in terms of the consumption, and the channel inventory goes up. But overall, over a period of 3 years, you see that the markets are still growing, not at the same rate as perhaps the other regions. But Europe market is also quite attractive, and especially with the portfolio of UPL and Arista together, I think it makes a lot of strength to our new UPL.
Vikram, just one last question to you. How are you observing Chinese issues which are panning out right now, like regulatory clamp down in China and chemical facilities shutting down because of that? Do you see additional business come to large companies in India perhaps, or do you also see some M&A activity come in? Is this a opportunity arising for India?
So China has a very robust chemical and agrochemical industry. Their agrochemical industry is actually the agrochemical and chemical industry is probably the largest in the world, more than $1 trillion. They have a segment which wasn't very environmentally compliant, where the factories weren't very up to date, and rightly so, as they have become a superpower in chemicals and a good supplier for agrochemicals. They have obviously cut back on some of the companies that weren't very up to mark. Those companies, I'm sure, will invest and come back. Second, UPL has always been a manufacturing company. So we've always made in India. we've had our factories in India. We've had a very robust capex plan over the last 5 years for our factories in India, and we will continue to have that. Second, we do source from China. Fortunately, our partners or suppliers in China, we've always been very, very proactive in having a sustainable supply chain. So we've audited them, we've worked with them. So we've not suffered so much personally. If you see our supply or our numbers, we have not suffered so much because we've invested with them, we've dialogued with them, and we've had a more of a long-term nature with a lot of them. Lastly, yes, we do look at companies in China, and we've always looked at companies. As I said earlier, we are very happy to talk to everyone, but signing on the bottom line, the finance people have to approve, our board has to approve, and let me tell you, they're very strict.
All right, guys, I really hope at ET that you will move forward in a sure-footed and measured fashion on the M&A side. Thank you very much, all of you, joining us today.
Thank you very much.